Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really been a pretty tumultuous week in the US share market. President Trump and his sort of tariffs have really wreaked havoc on the US equity market. It's quite interesting because sort of pre-election, Trump was talking about, a strong economy and keeping a strong economy going, creating the greatest share market and stock market there had been in his first term, and that will continue in his second term. But so far, it's been anything but. US equities are down nearly sort of 5% for this month, and it's really a culmination of factors. Obviously, tariffs, rising inflation, rising costs for the US consumer, a weakening economy in terms of weaker jobs data out there. And then potentially the sort of final nail in the coffin there was the interview that Trump gave at the weekend, where potentially he was talking about the possibility of a recession in the US. And if that is the case, it'd be hard to blame anyone else but himself. It's really his policies that have brought this on. And the tariffs, certainly in Canada, it's all about, fentanyl coming through the Canadian border. But figures have sort of shown that it's around 1% of the fentanyl that comes into the US. And Trump has now sort of doubled down on his tariffs and putting 50% on the steel tariffs for Canada. So the Canadians have retaliated, and not just putting tariffs, but they've taken US alcohol off the shelves. So there's no sales at all. Potentially with slowing economy and rising unemployment, you would then have less corporate earnings, less taxes, which will then impact the tax take for the federal government. And all this against a backdrop where Congress is still trying to scramble to actually get a budget passed, or a stopgap budget, to keep the government going. Because that budget is 6 months overdue. And there appears to be some cracks as well in the sort of administration, with Elon Musk and Marco Rubio clashing pretty aggressively at a closed-door cabinet meeting last week. And certainly Musk is coming under a lot of criticism, and also as well, quite a bit of sort of boycotting of his Tesla brand as well. And in a strange comment, Trump has come out and said this morning that boycotting Tesla is illegal. Well, surely that's just freedom of choice from the consumer. Also, as well, the criticism of the trade deal between the US, Canada, and Mexico. Trump has come out and said that was one of the worst trade deals ever. He was actually the person who negotiated that in his first term. So against this uncertainty, the Fed has come out and said, it's very hard for them to sort of predict what's going to happen to rates in the near future, because they are just very unsure on what the sort of policies are and the impact on the economy. Because certainly the latest jobs data was weaker, came in at 151,000 versus 170 expected, but also as well, January's was revised down to 125,000. That's in rates in the US. They're hovering around, but the 10-year is currently sort of 429, and the 2-year is 396. But Goldman Sachs has now come out and revised down their GDP for the US to 1.7. from 2.2. So that's below consensus, and it's really an indication of the way they see the US economy heading for the next sort of 9 to 12 months. Potentially weaker growth and higher prices. Now, oil has fallen back to 66.35 and change, and the Trump administration is trying to take credit for that, but that's really on the back of sort of weaker demand going forward as the US economy slows, and then potentially obviously a global slowdown, and also as well increased supply with Trump's policy of drill baby drill. So weaker demand, higher supply, prices are going to fall. Now in the UK, Keir Starmer is still trying to sort of gel together a united sort of front from the EU region in terms of sort of supporting Ukraine. Because really, Trump has sort of thrown Ukraine under the bus and really handed it to sort of Putin and Russia on a plate by suspending the military aid and then also suspending the intelligence as well. So Ukraine was pretty much fighting blind and really finding it very hard to identify sort of Russian attacks. But on the back of that constant bombardment for the last sort of week without the sort of US help, Ukraine has now agreed to a ceasefire if Russia accepts. Now it will be very interesting to see what sort of demands and sort of provisions Russia puts on the ceasefire. Now, a little bit of good news in Australia. The retail sales were up 0.3 for January. They gave a 3.5 reading year on year. But then potentially the tariffs from the US on aluminum and steel out of Australia could have some impact on the economy. Now here in New Zealand, obviously the big news was the resignation of Reserve Bank Governor Adrian Orr. But then better news was sort of Fonterra looking at potentially record profits and also increasing the dividend as well. So you've got a good payout, $10 for the milk payout, but also an increased dividend payout as well. And horticulture is also tracking pretty well as well. So, there are some encouraging signs for the New Zealand economy. Because that, and on the back of the sort of, increased spending from tourists, potentially there are some sort of green shoots, a little bit of light at the end of the tunnel. Especially if we see a further rate cut in April from the Reserve Bank. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I look forward to speaking to you soon.